All right, let's talk crypto. If you've ever found yourself just staring at a crypto chart, you know it's a total roller coaster. But today, we're going to go way beyond just the price stickers. We're peeling back the layers to really get a look at the hidden mechanics, the unseen forces that are actually moving the crypto market. Okay, let's get into it. So you see a number like this pop up on your screen, right? And you feel that little rush of excitement. Up almost 7% in just one day. That volatility, that big green candle, that's the adrenaline that pulls so many of us into this space. It's the final product of millions of different decisions, hopes, and, fears, all playing out in real time. But what is really behind that number? It's not magic, that's for sure. It's this super complex dance between narrative, psychology, and frankly, power. So let's go on a little journey here and uncover the engine room of the crypto market, one fascinating layer at a time. We're going to start at the very top with the first force, narrative. You see, before a single dollar ever gets invested, a story has to be told. Crypto is built on these huge, futuristic, and often kind of complicated ideas. So the number one job for any project is to sell that dream to the world. And this right here, this is the fundamental challenge for every single crypto project out there. So you've got this revolutionary, potentially world-changing tech, but how do you get someone who isn't a computer scientist to even care? For these companies, getting people to just get the idea is this huge make-or-break moment. And this is their secret weapon. They're not going to send you a 10,000-word white paper. Nope. They create these slick, powerful explainer videos. And these aren't just commercials. They are absolute masterclasses in communication. They use storytelling to make you feel something, They use cool animations to make all the confusing jargon just disappear. And they use simple language to show you, hey, here's how this tech can actually solve a real problem. It's like they're handing you a backstage pass to the future. And this is where the belief starts. Okay, so you've got a killer story. People are hooked. What happens next? Well, that story gets translated into market action through the most powerful force of all, human emotion. This is where the narrative meets the money.
And this is the key. It all comes down to this idea: market psychology. Think of it like an invisible bridge that connects a project's grand vision to its price chart. It's not really about the tech itself, but about how millions of people feel about the tech, all at the exact same time. It's the collective mood of the market.
And this quote right here just nails it. Information alone doesn't move prices, reactions do. Think about it. Let's say a huge partnership gets announced. One trader sees it as a massive sign of growth and buys in. Another trader worries about the new risks and sells. The news was just the catalyst. It was their reactions that actually created the price movement. It's our collective optimism, our fear, and our greed that are pushing those numbers on the screen. And you've probably seen these reactions play out in this really predictable, almost universal pattern, the emotional market cycle. You can practically see human emotion just drawn out on a price chart. It kicks off with optimism, which then builds into total euphoria and FOMO. Then you get the flip side, denial, when things start to turn. That's followed by fear, and finally, full-blown panic. And then, right at the bottom of all that pain, the cycle starts all over again. It happens over and over and over. But here's the next layer of complexity. Not all reactions are created equal. In the huge ocean of the crypto market, there are millions of us small fish, but there are also a few very, very large whales, and their influence, it's staggering. Just look at this. This slide reveals a pretty shocking truth about how concentrated power is in this space. In a lot of crypto projects, the top 1% of wallets control over 90% of the token supply. That leaves just 10% for everyone else. The retail investors, the actual community. This is not an exaggeration. This is just the reality of how the market is structured. So, what does that kind of concentrated power actually look like in practice? Well, it means a single trade by a single whale can cause up to 25% intraday price volatility. Just think about that for a second. That's the power we're talking about here. And this slide really puts that difference into stark contrast. On one side, you've got fewer than 100 whale wallets controlling almost all the supply and pretty much dominating governance votes. They're the ones buying when prices are low. Then on the other side, you have the retail crowd. We're talking over 90% of active wallets, but controlling less than 10% of the supply. It's like a high-stakes poker game where the whales are sitting there with all the big chips. So, in a market that's driven by stories, dominated by these emotional cycles, and heavily influenced by whales, how does anyone even make sense of it all? Well, that brings us to our final layer, the tools that traders use to try and read the currents. This is where we can actually see market psychology become visible. Support and resistance levels, they're basically battlegrounds on the chart. The market remembers these levels. It collectively decides, okay, we're not going to sell below this price, and that creates a floor. Or this is where we take profits, and that creates a ceiling. It literally becomes a self-fulfilling prophecy, etched right onto the chart. Now, for years, traders drew these lines by hand, which, was really subjective and basically impossible to do for more than a couple of coins. But in a 24/7 market with thousands of assets, that's all changing. Now, automated, data-driven analysis can scan the entire market in seconds, finding these key psychological levels objectively and sending you real-time alerts. I mean, in a market that never sleeps, doing it manually is like trying to catch a tsunami with a bucket.
So, let's put it all together. We've gone from the surface level story all the way down to the deep structure of the market. What does the full picture look like? And more importantly, where are we all headed?
I want you to think of it like an iceberg. At the very top, the part that's visible to everyone, that's the narrative, the story, the dream. Just below the surface is the market psychology that story creates. Deeper still is the immense unseen weight of the whales who can completely change the market's direction. And then, at the very bottom, is the technical structure of the chart, which is shaped by all those forces above it. And these forces are building toward a really fascinating future. Here's a bold prediction for 2026 from Bitwise. Institutional demand, through things like ETFs, is going to be so strong that they will buy up more Bitcoin than is even being mined. This just shows you how that narrative of digital gold is attracting the biggest whales of them all, the institutions.
And that brings us to our final and maybe most important question. Now that you can see these unseen forces at play, the powerful stories, the emotional cycles, the huge influence of whales, it kind of begs the question. In this incredibly complex market, who are you really listening to? Your own strategy or just the noise of the crowd? Thanks for joining me on this one.